Welcome, everyone, to the Dad's Doomsday Guide. Today, we are pleased to have on Christopher Inks. He is an investor and trader with decades of experience. He holds degrees in finance, philosophy, applied psychology, homeland security, and law. And if that's not good enough, he is also the CEO of Texas West Capital, providing daily market analysis, as well as teaching people how to trade, which is where I know him from. Thanks, Chris, for coming on. I appreciate it.
Hey, man, I appreciate you inviting me here.
I guess to start off, can you give us a brief rundown of kind of how you got into trading and investing? Was it always something that you kind of wanted to do? Was it something you kind of found yourself in? What's your story there?
I like money. It really comes from that. I didn't come from any big, kind of wealthy background or whatever. Parents were, blue collar, military. But I knew at a young age that I didn't like working for somebody else. Mm-hmm. I didn't like being told what to do, when to do it, how to do it.
Yeah.
And so I figured, excuse me, as I was getting out of high school there, I figured, well, I'm probably going to have to work for somebody at points here, but if I want to not do it, I got to figure out how to not do it.
Yeah.
And that kind of led me, into looking at the markets, back in the early mid 90s or so, as I got out of high school, and just went from there.
And would you say that you were successful starting off, or how long did it take you? And how did you kind of, because I mean, you say during that time, we were just talking before we started here about technology and how everything's developed and how we can just get on and get access to information almost instantaneously now. How did you have to go about doing that when you were learning?
So, I talk often when I do my live streams and whatnot about these pitfalls that new traders fall into. And I talk about it. I chuckle a bit when I talk about it, not to be disrespectful, but because I've been there. I know. Mm-hmm. My first, 5 years, I guess, were just absolutely awful. Lost more money than most people know what to do with. And I just finally got to the point where I said, man, you know what? At this point, I've either got to learn what's going on. I've got to become a student of this market here, of the markets, or I just need to let it go, because I'm going to end up working for somebody for the rest of my life, which is what I didn't want to do if I continue to, just lose money. And so, that's what it did. It took me probably about 5 years to start becoming really consistently profitable. But I had to go through all that same stuff every new trader goes through when they start, which is this whole idea of they think they know what's going on with the markets because they can enter the market. This has become really bad with crypto. It makes it so easy to get in.
Oh, yeah.
They think that because they can, then they know what they're doing. And most often, the market is 180 degrees different than what you think it is when you first come in. Mm-hmm. And so you have to kind of get through that point before you can really start making some strides.
That's one of the first things I noticed, because I got into stocks and stuff really late. And for whatever reason, it's kind of what we're going to touch on next is I don't know who told me this, but early on, somebody was like, oh, don't do stocks, or it's all a rigged system and you can't make money and only the big players make money. And so I actually got scared away from it for a really long time. And until this March of 2020 crash, my brother got into it a little bit, and I was like, yeah, I'll buy some. And then I bought some, and then I bought some crypto, and then it kind of snowballed into this. So now I'm trying to learn how to trade. And one of the biggest things I noticed was as soon as I started to really try to learn what was going on, I realized how much I didn't know. And you start feeling like you're drinking from a fire hose, because you see kind of who you're up against and what they know and the experience. And so I think when I first clicked the button, think the first thing I ever longed was Chainlink. And and I didn't even realize it was on cross margin. So it was like a mess. I was like, oh my God, what did I just do? But I've come a long way since then. But speaking of markets, when you talk about markets and you talk about trading, kind of what are you referring to? What kind of did you start with, and kind of where are you operating now?
Okay. So so I started back in, like I said, right after I graduated high school there, back about 1995. I paid probably about, I think it was around $200 a month for a physical newsletter that I got. This is before the big advent of AOL's, always online kind of thing, unlimited, it's before all that, right? Mm-hmm. So once a month, I'd get this paid newsletter delivered to my mailbox. And I went through that. And so, that's what I was doing at first. And, I think back on it now, and there was a lot of good information in there, but coming as somebody who didn't know what they were doing, it was all very confusing. in the grand scheme of things. Because, again, I came in like everybody else, thinking I understood what was going on with the markets and what's going on with business and all this stuff. And then trying to, kind of make that work with that, it just didn't. So that was all those losses coming up there. Yeah, and you get a win just in time to continue to make you put in more money. So that's where I started. And then I started, like I said, started becoming really consistent there about 5 years later. And, it only took that long because it took that long for me to finally kick myself in the rear end and say, listen, you got to figure out what's going on. You got to stop assuming that you know what's going on out there and really start delving into why do markets move like they do. Mm-hmm. And so after I started becoming consistent in that early 2000s or so, almost mid 2000s, I entered Forex, and man, absolutely love that because again, I like money. Mm-hmm. And so trading currencies was a blast. And the good thing about trading Forex is, when you're trading stocks and other things, your charts tend to go to the left and up. Everything tends to rise in value. Mm-hmm. With currencies, generally there's a range. Now it may be a 20-year range, but you don't expect that, the dollar's going to go up forever against everything kind of thing. Mm-hmm. And so that takes a lot of that pressure of that always emotionally feeling like you have to be long kind of thing in there. Mm-hmm. And so then I did that and really kind of stuck around a lot of that for the next, until around 2017. Now I'd heard about Bitcoin in 2009 and 10. And like a lot of people, I thought, man, I need to go ahead and probably start mining this.
Yeah.
But life got in the way. Things got busy. Never got around to it. And then started in early 2017. I was in my second year of law school. And I actually created a Twitter account just because of a professor that said we kind of needed that for her to keep up with us. I think she just wanted people to follow her. She was a great woman, though. Great professor. But anyway, and when I did, of course, my interests are all these things. And I kind of fell into crypto Twitter, and it was so bad. It was so bad in 2017. Man, everybody, there was pump and dumps everywhere. The analysis was just so bad. And I kept looking and I said, man, so I got into crypto in 2017 there, bought Bitcoin and Ethereum. First two things I bought. Seems like most people, at least up until maybe recently. In January, bought Litecoin, January, February, bought XRP. That was my killer one. I bought that in, I think, around March.
Okay.
And I held that through the end of, 2017 was a huge run up. Mm-hmm. And so I got in with XRP at around about 61 hundredths of a cent, and sold it around an average of about $2.84.
Oh man.
So I didn't catch the top, and I wasn't worried about that. It was this huge run up, from basically half a cent to what you're doing there. So that's been my biggest thing with crypto so far. But but that's kind of how it's done. And so now, now most of my trading still remains with Forex. Mm-hmm. I do trade some with crypto. And then, of course, stocks as I get interested. I mean, it's just stocks just doesn't give you that same amount of movement that you can really get. And there's been some crazy ones lately, with GameStop and, these. But in general, the stock market tends to be a bit slower. So that's kind of what I do, and then commodities, of course, and some metals, doing stuff like that.
Because when I first started and I would look and see moves with stocks, I'd be like, oh, wow, I made such and such in a day. And then I went to crypto. I was like, oh, my God, that happened in like seconds.
Crazy.
It's really wild. I mean, I guess for some people, it depends on how much you have riding. And I think it's something we'll talk about in risk management and stuff. But I've never been... I like gambling. I'll go to Vegas. I'll go to Tahoe. I want to play craps, but I've always had it in the back of my head, like, hey, I'm taking this much money to play. And if I lose that, I'm done. I don't keep dipping into my account to keep going and going and going and digging myself a hole.
It's the only way to do it.
Yeah. And then I feel kind of sane. So I've never been a big gambler. So I never had that problem with, oh my God, I'm betting the house. Like you see some people on crypto and it's just like, they're doing these moonshots, and you'll get the one person who is a millionaire, but you don't hear about all the other people who are financially destroyed. And I don't want to be financially destroyed with kids and stuff. It wouldn't be a good look.
No, not at all. Not at all.
But do you think if people are doing, because a lot of people are coming up into crypto, including myself, and it's very hard, like you said, to kind of look at the other things, but are people doing a disservice to themselves by not partaking in, Forex or equities or options, or should people be looking at that if they're interested in investing and trading?
Again, the easy thing, the thing about crypto is, For instance, if you want to trade options, you've got to usually, to get your broker to allow you, usually they say you have to have a certain net worth, you have to deposit a certain amount. And it's usually quite high for most new traders. They come in at the end of a cycle, where it's all the retail coming in. So that kind of dissuades you from there. And some of because legacy markets like stocks have been around so long, it can be more difficult for people to get in. So crypto is this easy thing for people to get into. But I think that, if you learn to trade properly, I don't think there's any reason why you shouldn't be in anything else. We have these times where Bitcoin just kind of goes sideways for a while. And I'm over here, knocking out, profit after profit trading, Forex because it's still moving or, trading some stocks. And so I think if you really, you don't have to just, you don't have to trade all the markets. You can stick to one market if you want. I don't know. For me personally, though, I think it's great to have options. I think, you've always got something. If your particular market goes stale for a bit, you've always got options to make some money elsewhere. So, there isn't any problem sticking with just one. But me personally, I like to have some options.
Would you say Forex is kind of the most similar to crypto if someone's coming from that and wants kind of that movement?
Oh, very much so. One thing I used to say a lot when I first came in was how the degenerates used to be in Forex, and now they all moved to crypto because Forex often allows you this ridiculous amount of leverage, and you can short and long easily. It was pretty easy to get into generally. So yeah, there's a lot of similarities between the FX market and then crypto.
Cool. Yeah, it's something I want to get into. We'll see. I've just you start trying to learn, and it's like you kind of either have to shut off one part of your brain. It's like, okay, I'm not going to take these trades, or I'm going to do a very small amount so I don't blow up my account while I'm trying to understand what's going on. So it's kind of a back and forth for me. Speaking of what I mentioned earlier about markets being rigged and then kind of having that instilled in me when I was young, everything that happened with GameStop and then Robinhood shutting down trading, and then you had this whole kind of movement on social media that a lot of people were kind of outraged and saying, oh, look at the corruption. And just because they're hiding behind suits, it's still corrupt and manipulated. Whereas like crypto's criticized a lot for being just in your face, in your face, like rug pulls and like things going on. They don't typically try to hide it.
It's blatant.
Is there truth to that in your experience and kind of what you've seen over the years? Or is traditional markets, I guess, fair? I mean, how do you fall on this, and what was your thoughts when all that was kind of unfolding?
So, I think the biggest thing that people need to learn as far as markets go is, everybody's very concerned, especially in crypto. It's all about the whales. Oh, the whales are dumping on you. The whales can make price move and whatever. And, but the reality of it is, just like in any other market, especially now with the size that we've got here with crypto now, it's grown so much over the last few years. The market isn't really going to do what it's not prepared to do. So if the market is actually really bullish, you can have a whalers, some New York type, whatever, just dump on you. But if the market is truly bullish, for the most part, it'll suck all that up. It might dip a little bit, but it'll absorb all of that and continue up. So this idea that, one person can kind of go in there and make any kind of real movement other than some kind of knee-jerk temporary reaction, I think is kind of silly, because at the end of the day, what most people don't understand is when you have a lot of money, you're much more keen on keeping it.
Yeah.
I think a lot of new traders, they come out here, amateur traders that are just starting out, and they come out with $1,000 or $5,000. And for them, that may be a pretty big, bit out of their wallet. But still, they kind of trade it like it's a scratch off, They're always just trying to long for the hills. And if it doesn't go down, I'm going to be upset about it, but oh well. What you find with people that have significant sums of capital is that they tend to be much more protective of that capital. And so this idea that they're just going to jump in there and just dump everything to send price down doesn't end up making a whole lot of sense. So from that, you can take out from that markets aren't necessarily rigged. They're nudged around by people who understand what they're doing. They understand the rules of the game. They understand how it's done. There's always going to be those that try and circumvent the rules, especially if you're in the legacy markets, you have wash trading and all these other rules, that keep you from doing things that people try to do in crypto, but still people get caught trying to do it in stocks as well. But in general, I wouldn't say that the market itself is rigged. I think it's just that the market participants that are making the money tend to understand how to do it versus the new traders who come in, who, again, as I spoke about at the beginning, think they understand how things are working. And then when it doesn't go that way, their fallback is, oh, it's somebody else's fault. It's manipulated. It's not my fault. It can't possibly be my fault. Well, I think that's kind of where we get to it.
That's trending these days, right? It's never my fault. It's somebody else's fault.
And everything, yeah.
So when you saw something like GameStop, was that to you some of the excuses that were coming out and why they were doing what they were doing? Was that to you legitimate?
If we look at the charts, you know me, I'm big on charts, man. Mm-hmm. It's like I'm not a big follower in the whole fundamental thing. I think, the markets themselves, everything is driven by social mood. And so that shows up in the charts. And, if you look at GameStop where it rallied and stuff like this, it was in an area where it should have. Now, did it rally exceptionally? Yes. And so maybe there was a little bit of booster put on it by the jump in and the way in which it was done. But nonetheless, the reversal was sitting right there waiting to happen. Yeah. And, and so then everybody kind of gets on there. It makes it an easy move up. And then everybody jumps into the top when it comes back down. And, again, it's everybody else's fault, not yours. It's Wall Street. They're dumping on you, but all that stuff is really kind of just it's not that the move up was manufactured or anything. It's more along this understanding that that the depth or the degree of that move maybe had a little bit of help. Okay. But price should have generally been doing that anyway if you looked at the charts. So yeah, it gives it a little boost, a little temporary knee-jerk reaction. But all in all, the market moves the way it's going to move.
And for people, I think I've heard you reference it in the past too, but for people who don't really know, I mean, when people talk about technical analysis and like drawing lines on a chart, it's mocked a lot by people, I think, who don't really understand why it's developing this way. But a lot of it, and correct me if I'm wrong, is just psychology. It's we're all looking at the same thing. We're all drawing the same lines and support resistance levels, and like big money is like looking at these things too. So it's kind of a self-fulfilling prophecy in a way. Is that kind of an accurate way to describe that?
There is part of that. Yeah. The reality of it is, markets aren't random. There have been lots of books 20, 30 years ago about, how markets were random and whatnot. They're not. People aren't really random. People tend to act in certain ways. And again, if we look at that as being social mood kind of dictating what goes on with cycles around us, whether it be the economic cycle or, fashion or whatever else, the reality of it is, this stuff happens as a result of this aggregate collection of this movement between fear and greed. Mm. And so, I myself, I have my reactions to fear and greed, you have yours, and then together as us and, hundreds of thousands or millions of other people together, we create this market. So the market generally moves in a self-fulfilling manner. Okay. Now, that doesn't mean it moves exactly the same at all times. It's sometimes the degree in which fear or greed is heavier is going to give a stronger movement. But it generally does. And so you learn to use these technical indicators to kind of measure out that movement. Okay. And so, to a degree, it is self-fulfilling, but only because people are predictable to an extent.
Okay. So, so basically, if someone comes in to trade or to learn, really, it's kind of, is the end game and the goal just to be on the side of the big money, those movers that are kind of, okay. And to do that, where should someone, or what I've heard auction market theory thrown around, and it's something that I have so much stuff. It's kind of like this pending this pending list of things I need to read, to watch, and there's so much content and information at your disposal. But is that somewhere to start? How can someone get that pulse on big money? What should they understand fundamentally about the markets to really start getting ahead? Because for me, it's very frustrating, and I've identified it early, I feel like I'm always a step behind. Like no matter what it is, like I'm one step behind. Like, oh, I see something, but I saw it too late. Like people are talking about something, it just drives me nuts. But does that go into this? How do you get that little bit of a step ahead, or to know what they're going to do before they do it, so you can get positioned?
Yeah. So my my first bit of advice to any trader, especially if they're new, and I consider people new traders, they can be in for 3 years trading and saying, "Oh, I'm a professional trader. I've been doing it for 3 years." And my first question is always, well, are you consistently profitable over the course of a year, over multiple years? If you can't say yes, then you're still a new trader. A lot of people get in there and they continue to throw money in the market year after year, but they're not learning anything, right? They're not doing any better. And so my first bit of advice is always start with larger time frames. Start with your daily, and then as you get better at that, you can move in, because there's a lot of what we call noise, which is this up and down price action. And the smaller your time frame, the more of that there is. And so it's really difficult to figure out what you may or may not be doing in terms of price action when you've got all that noise going on. Your larger time frames mean you have larger stop losses, which means you can weather more movement and whatnot. And I say that because you mentioned auction market theory, which actually has to do with something called order flow, which is a tick by tick kind of trading philosophy, which is it's very short term usually. Now, the best way to understand what the big people are doing that I found in my life is the Wyckoff method.
Okay.
So Richard Wyckoff created this, about 100 years ago, still relevant today, still works. And basically the idea is understanding that price action and volume relationship as price creates ranges. And then because the one thing that your big players can't do is they can't hide their footprint. Mm-hmm. You will always see the big players come in with these large bits of volume. And so the idea is to understand how that works within the range so that you understand whether price is going up or down, whether it's, accumulation or distribution. Mm-hmm. And it takes a little bit at first. Price action volume analysis is a very nuanced thing. So it takes a little bit, just like anything else. It'll take time to learn. But I think as new traders, if you can get that down, it helps everything else you're doing. Whether you go on to Elliott Wave or whether you just look at supply and demand or whatever you're looking at. I mean, this is like the place. That's to me is the easiest way to get a real understanding of what those big players are doing.
Yeah, because you see a lot of, there's always, because if you follow crypto Twitter, and we'll get to that whole environment, but you look at a lot of people who are good at what they do, and a lot of them have different ways of analyzing that information, and a lot of new software comes out, new analytical tools. But what I found from watching you, and it was interesting, is just turning all your volume like one color. Like there are ways you can just kind of get around and just like focus on what's actually happening and to understand that relationship. It is a little weird at first because it's kind of counter. It's like, okay, so I don't care about that, but that spike down there. So I've personally tried to take that approach to where I'm learning that portion of it instead of it's very easy just to skip it because it is kind of like you got to bend your head a little bit to get around it. Mm-hmm. In your opinion, what's the number one reason? Because I hear this so much. 95% of traders fail. They blow up their accounts in the first whatever amount of time. Why? Mm-hmm. What is the number one reason that you've seen that's true, that new traders fail?
Risk management, lack of it. Proper risk management. Risk management, that's where you make your money day in and day out. It's not sexy. It's just a little bit of math, It means that you can't YOLO in with everything you have and mortgage your house and throw it all in there and hope it's going to go up. Yeah. At the end of the day, we're human beings. We can't possibly know the outcome of every decision we're going to make or the decisions from those decisions, this whole decision tree thing. And so we protect ourselves from ourselves with proper risk management. And, trading is a skill, just like anything else. It takes time to learn. It takes time to master. People come in, though, and they need to do it tonight. They need to make $1 million yesterday with their $500 account, Yeah. So they become emotional. They don't look for confirmations. They're not using proper risk management. But at the end of the day, even with all that other stuff, if you're using proper risk management, it's going to help you. It's going to make sure that you're not losing everything every trade, because you're going to be right sometimes, even brand new, not knowing what you're doing. You're going to be right sometimes. And when you're right, it usually has the ability to take out all that you've lost there as long as you're using that proper risk management. Mm-hmm. So, it all comes back down to risk management. It is like the thing that people don't want to do, but which they really need to do most.
Have you ever found yourself, even today, with all of your years of experience, violating your own rules and being like, oh, this looks so good, I'll do a little more?
Let me preface this by saying, it's easier these days not to do that.
Okay.
But again, I'm still a human being. I still have emotions. It's easy to still kind of feel a little anxious, a little emotional when everybody around you is doing that.
Mm-hmm.
So it's not that you ever don't do it anymore, but it becomes easier over time. It's like anything else. The more you do the thing, the easier it becomes to continue doing that thing.
Mm-hmm.
But it doesn't mean that you ever have to get to the point where you don't have to worry about it. I just believe that if you stop thinking about it one day, you're just going to go right back the other way. And no matter how many years you've been doing it, it's going to suck you in. And when you look at social media, it's so big today.
Oh yeah.
And it's so easy to get sucked in because, your content that you're seeing on your page is curated for you by AI, which tracks you and says, well, you probably want to see this. And it creates these echo chambers. And then you're like, oh, well, everybody's long or everybody's short. And they're really not. Just, it seems like that in your timeline,
Yeah.
So you've always got to be careful with that.
And if you add in risk management to kind of that scenario where you're talking about 95% of new traders failing, where do you think that number drops to? I mean, because there's so much more you have to learn. You have to be kind of willing to put yourself out there and like really trying to like research the information. I think obviously to be successful, like anything,
Mm-hmm.
but where do you see that number dropping significantly if someone just says, oh, hey, I need to be able to calculate where my stops are going and why they're going there? Do you see that number dropping to like 50%, 40%? I mean, can anybody do this? Or are you still talking about there's got to be an element to your personality where I'm going to research and learn too?
No, I really, I've been doing this, 25 years now. I've talked to so many traders of so many types from so many places throughout the world. And I firmly believe that anybody can do it, as long as you normal, mental capacity, I guess what you want to say. Where you've got the ability to reason and whatnot. It just comes down to, are you willing to be humble and to admit that you probably don't know what you think you know, as far as it comes to trading, and open to learning? Because your risk management, I mean, that'll extend that 95% of traders are out in 3 months thing. I mean, that could extend it to a year or more. But unless they're doing anything to actively change how they approach the market, they're still going to eventually get down, to nothing.
Yeah.
So the goal of the risk management, especially when you're new, is just to make sure that you stay in there. I've often drawn on the chart this idea that you start here, and when you first start, you're going to lose money. So you're doing this thing, and then you'll get better, and you'll start getting better, if you're paying attention to learning, and it'll curl back up. So the goal is during this point right here, from where you start, you curl down, you start heading back up. You want to be able to weather that, and you can't do that if you're not using proper risk management.
Yeah.
So but you've still got to be willing to get in there. Yeah, you've still got to be willing to understand that you're being emotional and not to be emotional, which is easier said than done. You've got to be actively looking to understand how to do it. You can't just do risk management and then still just be emotional about it. You're still going to lose money.
Smash long. Oh, I put a stop
every
there.
time, right?
Chris said it's
okay.
okay.
Drop lower again. I go long again. I went out. I'll go long again. Yeah, exactly.
Yeah, I underestimated how hard psychologically it is to trade. Like, no matter, even if my position sizes are small, it's like you start getting from the FOMO to the social media influences. I really underestimated that. I mean, it's almost bizarre, like how much as soon as you put a little bit of money on the table and like some skin in the game, it changes everything, and you start second guessing yourself. I almost feel like maybe it's when you're new, is just to walk away, like set your stop, take profit, and just like have a thesis and then walk away and not try to over manage it, because you can start, how much of that is actually, intelligence speaking to you, like, hey, the market's shifting, I need to get out, versus you just having a panic attack because the candle's going back down. Do you find that to be a good strategy for new people, is to like have your kind of like what you believe is going to happen, set it and be okay with that stop getting hit? Or do you, part of risk management, I know, trailing stops and stuff, should people be trying to kind of implement that from the beginning?
Yeah. So, again, you hit upon it perfectly. I always say that trading is simple, but it's not easy. Trading is just really price moving between points of liquidity. It's not easy because the biggest thing you're going to have to fight against as you trade is yourself. It's your own emotion. It's your own psychology. It's not Wall Street. It's not some whale out there. It's not some Yahoo who said this or that on there. It's you. And for most traders, that's where they lose their money. It's because of their own shortcomings in terms of understanding their emotion and what they're doing there. And so, yeah, I mean, the goal any trade, when you put in a trade, you should know where where your entry is, where your stop loss is, where your take profit is, and you should set it all up and step out. And that way you're not sitting there, because like you said, when you're sitting there watching it, you get caught up. And new traders have this thing where, okay, they might have a target. Let's say you're doing Bitcoin. It's at 50,000. You might have a target of 55,000 or 60,000, right? But they're going to jump it on a 5-minute chart. And man, oh man, that's going to wreck them mentally and emotionally, because they just see, they get this big, huge chart on their screen of the 5 minutes. So these moves look huge.
Yeah.
And if they just zoomed out, to the daily or whatever, they find out, oh, it's not really a big deal. But they tend to do that. And that's going to affect, again, that whole emotion that you've got going on and whatnot. And it just makes it really difficult to trade. You really set yourself up to lose your money by sitting there babysitting those trades.
Yeah, I've seen people on social media, they'll post a chart and go, oh my God, look what just happened. And they'll have like this huge red candle like all the way down. It looks just massive, like a cliff. And then you look at, it's a 1-minute chart. And it's just like, if you're not paying attention, it's like, well, okay, well, that doesn't, I zoom out, it doesn't mean anything to me because I'm not doing that. I mean, obviously if you're scalping, it's a little different, but it
can be awful.
It's so easy to get distracted by that stuff. So on average, how long would you say, how many years for the average person to be profitable? Have you seen, I mean, is it kind of just based off what happened to you, or have you seen like through your years of teaching, is there like kind of a 1 year, 5 years to where someone's like, oh, they know what they're doing now, they're making money?
I think usually it's 2 to 3 years to become consistently profitable. And that seems to hold true with most traders that have been in a while. That seems to be the thing that we kind of all notice, I think. Mm-hmm. There are people that pick it up within a few months. There are people that take, longer. And it really is just what I said. The biggest thing that people have an issue with is getting beyond their own emotion, getting beyond their own psychology there. Mm-hmm. And so, we're all different people. So some people can figure that out sooner than others. But yeah, generally I think it's a 2 to 3 year thing. I think it's just probably the average. Yeah. And
depending on what it is, but fundamental analysis, does that have to be a part? Like I know you mentioned that's not really something that you worry about too much, especially in crypto. I feel like it's so difficult because unless you're like in the tech and really understand it, there's so many people who like push this project or that project, and like how many of you actually understand what's going on? Because I sure as hell don't. And I'm like, like you can look at, I see other guys just say, oh, TA is kind of where it's at. The price will tell you what's going on. And I tend to be more on that side because I can't look at a balance sheet. I can't look at, the board. I can't look at, their cash flows like you would like a normal stock to get an idea. Do you ever see yourself kind of treating those two differently, or are you pretty much across the board, I'm not going to worry too much about fundamental analysis?
Yeah. So, again, as traders, there's the two groups of us. One is very TA focused. The other one's very fundamental focused. Mm-hmm. I just, I've noticed throughout the years that you don't have to know the fundamentals because if you understand social mood, if you understand the way in which people act and react and how that affects the market, because really what you're seeing on the screen in the chart is just this visual representation of what's going on, right? Mm-hmm. So it's not the actual trading that's happening. The trading is happening when something is at the moment something is bought and sold, is that agreement. So what we see on the chart is just this aggregate result. And so especially in crypto, where I still think crypto is just a very speculative market more than anything else. There are a lot of great ideas out there, mm-hmm. but we know historically in any market, it just in life itself that many times these great ideas are either early or just they're there, but they just can't pick up the steam that everybody needs. Mm-hmm. And so, if you go in there and you try to go in there and you say, oh, well, this is a great project because A, B, or C, especially when it comes to crypto, I think you're really putting yourself, behind the 8 ball there. Because as we saw in 2017, we had all this Ethereum killer and this and that, whatever, ICO craze coming up, and that bear market just wiped out most of those, right? Mm-hmm. So here we are again, and now it's DeFi and NFTs and all this stuff. And again, Ethereum killers and all this and Bitcoin killers. But I think, again, as we get into the next bear market, I think we're going to see the same thing. Most of it's going to get wiped out. And it's not that it's all bad ideas. There are probably some great ideas out there, but either they're too early or they just can't get the right money behind them, the right type of money, the right people behind them to make sure that it goes out there. So, I tend to stay a lot off of the fundamentals and I tend to spend a lot more time in the charts. Now, when it comes to fundamentals, as far as Bitcoin goes or the crypto market goes, it's all about Bitcoin. If Bitcoin's having a rough time, more or less in general, the crypto market itself is going to have a rough time. If Bitcoin's doing well, generally rising tide lifts all ships. Everything kind of comes up with it. But when you get, so then, if you think about things like Forex, there's some fundamental stuff that I tend to watch on there. A lot of the numbers the government releases are knee-jerk reactions. Every first Friday of the month here in the U.S., we have the non-farm payrolls report, and you're going to get volatility off that. But overall, price is going to continue doing whatever it was doing. But so, I tend to watch stuff like that, or, certain currencies are commodity currencies like the loonie, which is the Canadian dollar. A lot of its value is derived from whether or not oil is rising or falling, because Canada happens to get like 25% of its revenue from exporting oil. I watch that, or the Aussie or the Kiwi over in New Zealand, because they're also commodity currencies. So I watch a little bit of fundamentals with that, just to have an understanding of how they tend to rotate and relate. But at the end of the day, the charts are what really kind of lets you know where things are headed overall.
Yeah, I was thinking about that. I thought like Forex, that would maybe be something that it might pay to know a little bit about what's going on with jobs and different things, because obviously there's some influence there. Crypto, I feel like, it's just like you probably could pay attention to Bitcoin and kind of know generally how everything's going to be going. But I feel like, it's just an odd, almost like, why even bother? Sometimes I felt like that in the beginning. Why even bother charting some of these altcoins? Because literally, there's just a mirror of Bitcoin, whatever it's doing. But then every now and then you'll get something that's got extra hype or something, and it's like skyrocketing, even though Bitcoin's kind of falling. But speaking of Bitcoin, what are your thoughts long term? Do you think it's going to be around? Do you think it's going to be one of these cult things? It's just kind of simmering below the surface, and you can kind of make some money at it. But like, these maxi dreams about it taking over the world economy is like just exactly that.
Well, so a lot of that's based on the idea that the dollar must die. Because as long as the dollar is around right now, it is the world's reserve currency. Most of the, over half of the world's debt or whatever is denominated in dollars. You need dollars to pay that U.S. debt. You can't pay it in your own currency. Oil is denominated in dollars. The idea that Bitcoin's become some worldwide reserve currency is necessarily predicated on the idea that the dollar has to die. Now, people have been romanticizing the death of the dollar for 40 years now, and it hasn't happened yet. And I don't think it's happening anytime soon. A lot of, they say, okay, well, why is the dollar such a reserve currency? Well, it has to do with the amount that we export, the amount that we import, our economy. It has a lot to do with our military. The fact is, we've got boots on the ground in the 195 recognized countries that the U.S. recognizes as countries in the world. So we've got boots on the ground everywhere. We've got 24-hour deployable forces anywhere in the world. We've got the most advanced military. I don't say this because I'm in the U.S. and I'm rah, go U.S., let's take over everybody. But it is the reality of what's going on. And so these things contribute to the U.S. continuing to, have the dollar as that reserve currency. And as long as that is the reserve currency, I think the idea that Bitcoin's going to become something substantial in that way, I think is really not. Now, in order to be currency anyway, we're going to have to get a lot of this. We have significant rises and falls with Bitcoin, a lot of volatility. You can't have a currency that's that volatile. You've got to have it would have to reach wherever its peak is. Who knows? Maybe it's 500,000, maybe it's 1 million, maybe it's 5 million, whatever. It's got to hit that level to where the volatility shrinks massively. Because as people in El Salvador are finding out, okay, so now you have to use Bitcoin. Well, today it's worth, one Bitcoin's worth 40 grand. Tomorrow it's worth 34 grand. Well, sheesh, I just lost, 20%. Almost, what's going on here? Yeah. And you just can't do that. If something's going to be used as money, it has to be trusted that it will keep its value.
And do
so I don't think it's going to do that. I think Bitcoin's got a lot of opportunity to continue to remain around, to be something that people can trade and invest in. But the real big thing that a lot of people don't want to talk about is this fact that Bitcoin's only been around over the last, 12 years or whatever. So it's only been around during the secular bull market. We've never seen how Bitcoin's going to react in a negative environment, in a recession or a depression. But what we do know is Bitcoin is very risky and risk off or risk on. So it's a risk on asset, which means when people are feeling risky and they're not worried so much about the markets going down, they're going to, throw more money out there so that'll go up. But when it's the opposite and people are worried about the economy, they're worried about the markets, the most risky assets are usually the first ones that they pull their money out of.
Yeah.
So Bitcoin's kind of sitting with that right now.
So do you personally kind of look to having Bitcoin as a hedge against kind of future, uncertainty? Or do you just strictly trade this stuff and you don't want to be really stuck holding any bags long term?
Yeah, no, really, I've got an investment portfolio with some crypto, and I've got my trading that I do. My investment stuff came in when Bitcoin was right around $1,100, Ethereum was right around $15 to $18.
Nice.
Litecoin was right around. I remember my first Litecoin I think I bought for $2.79.
Damn.
So I've got this investment that I bought back there in 2017, and that's great. But am I going to hold that if it drops below that level? No.
Yeah.
No, not at all. I'm not. I'm here to make
I am
money.
out.
I am long money. That's what I am, right? It's like whether it's going up or down, I intend to keep the money that I'm making. And so, yeah, I do have those investments, and I won't hold them through anything. It's not like I'm going to put it in there, and if it doesn't work out, oh well. No, I've worked hard to get my money.
So yeah, I've always wondered about that because even people who talk about long-term investing. So do you have stops on some of these things? Like if this hits this portion, I'm gone. Or do you, or is it one of those things where you're going to just watch it and manually do this stuff as like crashes maybe happen or you feel like something's going to happen?
Well, no. So what I've got actually is I've got about if I remember right, like if we use Bitcoin as an example here, and with what I bought there and I've bought in a little bit since, I've got a hard stop there, right above that. I think it's right there around 15 or 16,000, I think.
Okay.
And in that way, if if we're doing what I think we're going to do, and if we go up to 100,000, there's little to no chance that price should hit that level. If it does, I become very concerned about it. And so I'm fine to get out because I lock it in 10 times. And you go, well, it's only 10 times. It's crypto. There's all these other ones. Well, yeah, we do that with trading. That's fine. But in terms of investing, making 10 times your money in a couple of years is pretty big.
Yeah.
So, I'm like, okay, I'm going to get out. That's fine. And if it does show that it's going to rally back up and do fine and the bottom's in there, I'll invest again. But I have no intention of losing that money that I've been holding in there for whatever it's been now. Gosh, I thought it was 2 years, but now I'm thinking about that's what 4 years now.
Yeah.
Almost.
I did that with this May crash because like I told you, I'm early to all this stuff. So and I knew it was going to happen. Like I bought all these like crap coins, shit coins, and I rode them all the way up. And I was like getting all that greed. I'm like, yeah, they're going to go up forever. And then it just like, boom, tanked. And I rode them all the way up and I rode them all the way down. And I'm sitting on just garbage. And I'm like, holding it, like, I won't do that again. But it's so difficult getting back to the psychology part of it to like have that stop and be okay with you're not getting the very, very tippy top, but you're getting out with what you feel is a good enough return. And it just, man, it's so difficult. And I'm worried I'm going to do it again, but I'm just like, man, you got to set some goals. I feel like if you don't have that, it's really easy to get wrapped up in that greed and just to keep, well, if it went this high, it's going to go that high. So you just hold on to it.
Yeah. And it's easier to do, the closer it gets to that high, and once it's there, it's hard to pull that trigger.
Yeah.
With what we do and the trader education we do, one of the biggest questions we get a lot is, well, how do you know when to get out? And when somebody says that to me, what that tells me right away is they don't have an intelligent reason to be out of that trade when they're trying to get into it. What I find is most traders, they tend to concern themselves about what they might lose, in other words, that little bit extra that it might go up rather than what they're locking in as profit. And so they're concentrating on that little bit there. So what happens is they go up and they get up there and they haven't exited like they should, and it starts pulling back. And then they're like, oh my God, it's down 5% or 10% from where it was. I should have had all that. I knew I should have gotten out there. I was telling myself I should have, and I didn't. And then they start praying to whatever God they may follow. God, please just let it go back up to that area again so I can get out. I swear to God, I'll get out at that point. And then it goes up there and it goes above and they're like, oh, wait, okay, no, I'm good now. And all of a sudden there's reasons why it's going to go higher.
Yeah.
And then it drops back down again. And then it drops down even further from where it was the last time. And now they're like, oh my God, I can't get out now because I've lost all this, which they never locked in to begin with. Instead of, oh my gosh, there's all this 80% or 90% that they've already made.
Mm-hmm. I feel like you're explaining myself.
it's everybody, man. It was me at the beginning, right?
Yeah.
And it's just very pervasive as a new trader. And it's because we're emotional.
Yeah.
And we don't want to miss out. But, here's the thing. If you're an investor, you should have a reason for a target. It should be a logical reason, something that makes sense, not just because, I'm going to pick it out of thin air.
Mm-hmm.
As a trader, you don't really care whether price is going up or down. You just care that the price is moving.
Yeah.
You care about the volatility because you trade it up or down. End of the day, your day is over. Work is done.
Yeah.
Treat it like a job. Go home, get done, whatever. Next day, come back, look at the market, see where we can go. But everybody's so worried about missing that big Bitcoin move.
Yeah. Or they're so on one side, like it has to go up. And if anybody says it's going down, you're a piece of crap and I hate you and I'm going to spit vile at you on social media.
Oh, it's bad.
Now for crypto regulation, do you see that? What form do you see that taking? And then do you see a scenario where the U.S. basically declares war on like Bitcoin or DeFi or whatever and really just crushes the industry? Or do you feel like it's going to be kind of a tandem force back and forth adoption over years here?
Okay, so when it comes to regulation, there's no doubt. I've talked about it for years, and the government's going to come in and regulate it. They're going to. There's no two ways about it.
Mm-hmm.
The thing we have to understand about regulation is regulations are barriers to entry. So they make it more difficult for people to get involved. Possibilities, you've got hedge funds where you have to have a certain income or a certain wealth level to invest in hedge funds. They could potentially do something like that with crypto. Crypto was built on the backs of all the little guys, and now the big guys are in it. And now it's only the big guys that can continue to be in it kind of thing, So that's always a possibility.
It drives me nuts. It's like you're basically protecting me from making money, but
right. And it is, and I have a certain understanding of it because law school and everything,
mm-hmm.
Where I focused on corporate law, tax law, and emerging technology law, and so I understand. Our hodgepodge of SEC regulations is just absolutely ridiculous. It's awful. It's awful. It makes it really difficult. But
what would you say? What would you say is their strongest argument for doing this stuff? Because it pisses a lot of people off, including myself. I find myself like, you don't care if I go to Vegas and blow a bunch of money, but if I see a company and I want to invest in it, you're going to tell me whether I can or I can't, and then raise the bar so high that I'm not able to, even though if I'm trying to educate myself. It's just like, but what's their best argument for like protecting me?
I know that's what they say. I don't necessarily buy that. I think that is the government does things under the guise of security. Again, I like to bring up often the Patriot Act, which came in after, the horrible 9/11 stuff. But at the time, I was warning back then, I said, man, this is going to be a big usurpation of power by government. And people are going to allow them to do it because nobody wants to be their own security. Nobody wants to be their own bank. Mm-hmm. They want all this offloaded onto somebody else. But government has learned that, hey, they can say, listen, we're going to do it to protect you. And then people are like, well, okay. Or, God, I hate it. But it sounds reasonable.
Yeah.
What it really comes down to is control. Power necessarily seeks to consolidate, which means that it becomes also more crazy on the outside. As it consolidates and grows, power becomes more worrisome, more paranoid. There's the word I'm looking for, paranoid. Mm-hmm. About things that are going on, which results in the creation of more laws and whatnot. And so it's no different with the agencies. And with the agencies, of course, then they fight each other. So, we've got the SEC saying we want to regulate Bitcoin. We've got the CBOE, we want to regulate Bitcoin. We got the IRS, we want to regulate Bitcoin. And the easiest thing would be for Congress just to come out and say, here's the law.
Yeah.
Because until that, you can take all this stuff to court. You can take the IRS to court. You can take SEC to court. You can take the CBOE to court, and you can let a judge figure out, whether, okay, yeah, it's they're doing it right or they're not.
Mm-hmm.
But if legislature comes out and says, you know what, Congress says this is the law, then we do it that way. And that would solve so many problems, though. The average age of the person in in Congress is pretty high. So there's that big disconnect on technology. We talked about it often in law school with the Supreme Court judges when they oftentimes don't even want to see the technology cases because they're just so far removed from everyday use and understanding of it.
That's interesting.
So I think it really, I don't think it's so much that they really want to protect you. I think it's more of just this whole control. And they want to be the one that says what to do and how to do it, I think is where it really kind of gets to. And so that, of course, is driven then by the way our government's set up. It's driven by lobbying. Mm-hmm. So our government's set up for lobbying. And in lobbying, the squeakiest wheel gets the oil, right? Mm-hmm. And so whoever's coming in there lending all that money generally gets the things they want to do.
Yeah, it's concerning when you mentioned the Patriot Act. It's like, it always seems to be in moments of crisis or things that happen to where that's like, well, we're going to do this now. And it's only, temporary, but then you notice it never goes away. Temporary. They never relinquish that power once they have it.
Right.
And so, unfortunately, getting into kind of like that political side of it, it's like, once you let go of that, freedom, it's like, doesn't come back. So it's upsetting sometimes to see that stuff, and it's frustrating.
It's tough.
You don't get just common sense people. Like you said, like Congress just comes out, gives straightforward answers, the law, boom, it's done. There's no ambiguity anymore. There's no confusion. But I feel like maybe they think that puts them in a corner now. They have to like adhere to certain things. They can't just kind of willy-nilly figure it out. As the technology is so rapidly evolving, they don't want to be locked into anything,
Especially in DeFi and the whole financial side of it. There's, we've got such a system of financial laws, money service business licenses and all this kind of stuff. And so a lot of it is to make sure that money flows as it should, that money doesn't get tied up in one area, because, government is all about the whole economy, and so, if money gets tied up in one area and that area crashes, then there's a whole bunch there. And then the government's asked to come in and take care of people and take care of companies and whatever. And so this is that big thing that goes on. So, part of it's that, it just, it's a tough thing. It's a tough thing. There's no government that's ever lasted indefinitely. They all tend to fall 200-300 years in. We're 233 years in now.
We're hitting our expiration.
Democratic experience.
Well, that's why, I was talking to a friend about that. I'm like, this stuff seems so cyclical. It's like you have I think it's, I don't know if you've mentioned it too. I'm pretty sure you have. Was the Fourth Turning?
Yes. Great book.
Yeah. And I just picked it up because like you see it, how it just moves. And I could see us just becoming totally just, our freedoms become so diminished. You have to hit that extreme where you don't have, the freedom anymore to actually think, oh, wait, we need that. And you just keep turning in circles, and there's over lots of years. But as we're getting down into time here, how do you see the macro picture, inflation? I know that's thrown around so much on crypto Twitter, and we can kind of get into that too. But I feel like people have a very superficial understanding of it. I'm not saying I understand it, but when you talk about that occurring, Bitcoin adoption, huge crashes, how do you see this playing out, and what's actually going on behind the scenes when you talk about inflation, deflation, and everybody screaming that, money printer go burr, and it's like a catchphrase, How do you see all that?
Yeah, no, I think you've got it exactly down there. The financial system itself is very intricate. It's very interconnected. It's not just simply this and then that. It's this. I tried to explain this on my live stream the other day. We can think of it as a set of pipes with valve releases all along, and all these different pipes. And so if you do, if you put water in point A, it continues on until you hit a release valve along the way, in which case then it goes another way until you hit another release valve, and you can let it go or continue. And so all this, there's a lot of one movement here may not necessarily mean one movement there. And so when you look at that, and you try to understand what's going on with inflation, the way I understand, the way I view it is that inflation is something that happens at the bank level. It's when the banks make make loans to you and me and other businesses out there, and money enters circulation into the broader market. What the Fed does with QE is that they basically, it's more or less a ledger trick. So they print all this money, and it goes to the primary dealers, who then turn around and give it back to the Fed, who gives them treasuries. It's all about the treasuries. And so this is kind of where that money gets stopped up, and everybody says, oh, all this inflation because the prices are higher now with a lot of things. But I think, again, that has to do with, I do think it's probably transitory. Everybody hates that Powell says that, but I think it's more a result of what happened over the last year with the pandemic and everything and the supply lines. We've got chip shortages, all these things. And then people moving out of the cities into the suburbs. So the housing prices are rising and now people want new houses built. So the lumber goes up. And so this is all, off that, not off the fact that there's all these dollars circulating, because the dollars aren't circulating. They're sitting in the Fed Reserve, which can't be touched by anybody. It's just there for the banks to reference as collateral, because the banks have laws. They have to have so much reserves to loan out so many loans. Mm-hmm. And so the Fed says, okay, banks, we want you to loan money. So here's the reserves that you need. Now go loan that money. Well, the banks are saying, yeah, not so much. Year over year, loan rates are down significantly. So if you don't have that loan stuff coming out, and if you're in a debt-based economy like we are here in the U.S. and most large nations, you have to have an increase. The money has to continue to increase. You have to inflationary money to keep that going. If you slow down or stop, or heaven forbid, go the other way, it's very detrimental for the economy, because the economy is debt-based. Mm-hmm. And so you need the banks to do that, but the banks aren't really doing that. And not even just the banks aren't doing that, but people aren't really interested in it. We've got the highest savings rate we've had in ever, during this pandemic. Mm-hmm. And so, that's deflationary or disinflation, or disinflationary, at least, mm-hmm. when you put money in the bank, because it's taking money out of circulation and putting it into the bank. So when we look at all that, and then we look at the amount of extra dollars sitting there in the primary dealer area, that needs to be sopped up, it goes to the reverse repo. But then you need treasuries, and treasuries are limited because of the debt ceiling right now. Mm-hmm. So there's big stress on the system as it is right now. Everybody thinks the dollar is going to do this deflationary or inflationary thing and drop in value, but it's often at this time where everybody is in agreement that something's going to happen, that usually things are different. And so everybody seems to think that the dollar is going to die off and flow way down to 80s and lower, and it could. Mm-hmm. But with what I'm seeing right now, I see a lot more likelihood that it's going to increase in value, which causes that deflation. And if we're seeing that, there's going to have a run on, because again, I talked about the debt earlier. So much U.S. debt is held, and it has to be paid in U.S. dollars. And if there's a lack of dollar liquidity there, that's going to chase prices up as people run in, because the higher the value of the dollar goes, the more expensive their debt becomes to pay back. And so you get that, and the dollar runs up. If the dollar runs up, everything else is going to, be affected negatively, because everything else, everybody's going to the dollar. Dollar's the safe haven. Everything else, money flows out of that into it. So I think we're, my thesis is we're coming to the end of the credit bubble. Uh-huh. And if I'm correct, then what we're probably looking at is something similar to the Great Depression.
Whoa.
Not just a simple recession, but, a big depression. It could be quick. It could be done in 5 to 10 years. It could go sideways. It could go sideways for 40 years.
Oh my God.
Yeah. It's go from that into stagflation once it bottoms out there.
So how are you protecting yourself in this kind of scenario? Like, what do you see as kind of the best, the people will scream gold or scream Bitcoin, the newer age people, or, they'll have cash on the side. I mean, where do you see the best kind of, are you diversifying yourself and kind of in preparation for this, or are you kind of moving toward one direction more than another?
So I'm really significantly a trader. So I make money when the markets go up. I make money when the markets go down. So that is my first thing. I try not to buy at the tops of markets. I've been talking for the last few years about potentially a topish market happening. Mm-hmm. So I've been leasing, moving down here to San Antonio, leasing instead of buying a property. Okay. Because I would kick myself if I bought it to the top.
I know. We're looking for a house right now, and we're just looking around in California, and it's just like, my God, the housing prices are so insane. It's like, you can't buy right now, because I don't want to be stuck with that as it plunges down,
Yeah, exactly. So, so I tend to be proactive in that. I don't tend to make those big purchases if I believe maybe a top's in there. Mm-hmm. If I'm wrong, worst case scenario, I'm wrong, price goes up for the next 8 years, and okay, fine. So I'll make a ton of money on the way up is good. But if I'm right, I'm not stuck with a home that I'm buying for, $2 million that in 3 years ends up being worth, $600,000 or something, mm-hmm. or heaven forbid, even worse, because we hit this deflationary spiral, right? Mm-hmm. So that's one way that I do it. I don't necessarily, I don't prescribe to the idea that that gold and silver and precious metals are going to protect you. I think there's a different thing going on there that most people tend to watch. So, if I was to do anything, I would take my wealth and I'd put it, if I thought it was really going down, I'd put it into long-term government securities. Because the only way that you're not guaranteed to get your value back out is if government actually is destroyed. It goes under. As long as the government's still around, you're backed by that government being around.
Okay.
And so I think that's probably the best way to do it. Now, you'll have opportunities as you get to the bottom of the movement, and that's where your opportunities are. You buy at the bottom. You bought, around February or March of 2009 is where you should have been buying, and then you just rolled this thing up. Like you saw during that quick crash there in March 2020, you bought down there. That's how you do it. That's where you buy. But other than that, I think most everything else, there's a lot of ideas about how to do this, but I think most of them you're going to be effective negatively in some way. I think the only way you can truly protect it, as long as the government remains, alive, and functioning, functioning, you just put it in long-term government securities. And then that way, because they'll pay you back out that value. They give you an interest rate that keeps up with inflation or whatever as it's going through there. And your value comes out at what it was when you went in. So that would probably be the best thing. I'm not overly concerned about it. I tend to, trade. Is there
any timeline where you see that happening? Like I know people can go, it could happen next year or it could happen in 10 years. And I know that's what makes it so hard. Nobody has a crystal ball. But is there a limit to where if you pass a certain amount of point, you're like, oh, well, maybe this thing isn't going to go off the rails anytime soon?
For me, it's more about watching the charts. It's always about the charts. And so I thought it would have been a little bit earlier. So I was wrong on it being there. I did get, of course, the top and then the big move down to the actual target with the drop of the Dow there. But that I think ends up being a warning shot, letting you know, hey, listen, we're going to come up here one more time. And when we do, y'all better be ready this time.
Yeah.
So my thing's going to be the charts. If the charts extend to a point in which the count I'm looking at, which says it should be at or around the end now, if it continues to move significantly higher than that, then we'll readjust the count and we'll look at it and go, okay, well, it's probably going to head up higher than there. At the end of the day, it's all about the charts for me.
And you're using Elliott Wave kind of to sense some of that stuff or try to like map it out a little bit?
Yeah, exactly. I use Elliott Wave. I've taken it back, over the last 100 plus years and kind of pulled it up, which is why I have this idea that we may be at this top now, which, we've been looking at for the last few years, kind of like this sideways area. Right. But yeah, if it continues going up beyond what extensions we normally look for, and it makes sense to have a different count or maybe we're not as deep in, then we'll fall to that. Sure. But I'm not going to be the type of person who's just like, oh, stocks go up forever. Just keep buying. You'll be fine. Because it does work. The stock market tends, if you look at the charts, they tend to move left and up. And recessions and whatnot tend to be limited in duration, right?
Yeah.
But if this is the big one, if this is that everything bubble, that credit bubble, that finish there, it's not going to be like that. It's going to last longer. And so if you're buying in this area, you might have to, like I said, you might have to wait 30 years till it gets back up there. And so if you're later in life, it doesn't make as much sense to buy up here.
Yeah.
And so those are things that I definitely look at.
Do you have a few more minutes? I know normally I run about an hour, but are you okay? Okay, good. I just was like, I have questions and I'll race through them if you got to go, because I want to be respectful of your time.
Yeah, sure. Go ahead, man.
Okay. So I guess, because I know we touched on it really quick, but when you talk about regulation with the crypto industry, and I'm a little biased here because I've gone a little too deep in crypto, I think. What are the warning signs for you in terms of a government adoption or government regulation to where you're like, man, I'm cutting this stuff. I'm moving back to traditional assets. I'm not going to risk holding even Bitcoin. Is it going to be a price for you? Is it going to be TA, or is it going to be kind of, there's so much FUD. I don't know. It's so weird to me. I kind of want to talk about that too, is like, I know news, and I've heard you say this and I agree with it completely, is like the market's going to do what it wants to do and it's ready to do. And the news, I don't know. I feel like it's like the nudge. It's like the kick. It goes, okay, go. Now you're good to go. But sometimes it feels like, when the market looks weak, there's a lot of bad news that comes out, or the market looks strong, a lot of good news starts flowing out and it kind of moves around. But so I guess it's kind of a two-parter. What do you feel? When are you going to get scared out of crypto, if ever? And how much of it do you think is being manipulated to get you out because big money wants to buy up what you're, the weak hands, that whole paper hand, like cliche arguments, and you just have paper hands. It's like, no, I want to keep the money I have,
Right.
How do you, when are you going to get scared and you're like, I'm done? Take your digital money and get out of here.
Well, at the end of the day, like I said, that 15,000 level to me is 15, 16,000, I think is really the point where I go, okay, what's going on? Now, I say that from here just as a general level. We'll see what's going on if we ever get to that point. Is it at the end of a large, bear market? So that could be the bottom and head up, or is there more stuff on the horizon that looks like it could really hamper Bitcoin and cryptocurrencies and really cause a bunch of hoopla going on there? Mm-hmm. So those would be some of the things I'll be watching. I'm always kind of interested in what the SEC and the CBOE and what they're all saying and what they're going with. I know the SEC is really trying to be real hardline right now. And I think they have to an extent, because you brought up the great point about how technology is moving so rapidly in this space. And then again, when we look in terms of what's a security, how do we define a security? And, they can, the SEC can't go in there and go, oh, well, this meets our idea of what a security is, but we'll just let you be. They're not going to do that, because then all of a sudden they're brought to court with all these other companies who say, well, what about us? So they have to kind of follow along. And at the end of the day, they're just people trying to do their job the best that they understand their job to be.
Mm-hmm. You see some of these quotes coming out from like Elizabeth Warren and Genza, and it's just like, it's nauseating. I'm just like, I can't stand her anyway, but it's like, she's so wrong. And I'm not even like a crypto guru. It's like, but it's just like the little research I've done. Like, oh, what are you talking about? Like
she hasn't done anything. Right?
Yeah. Are you being told this? It's so weird. Or is it just like, I don't know. I don't know for me personally when I'm like going to listen to the rhetoric and be like, okay, something's wrong here. It's time not to be involved anymore. Because I feel like all the smart money is going to be out or be selling it in. They're going to be selling you in the pumps. You're like, oh yeah, this is great. It's going to the moon. It's like, oh, crypto's banned. Sorry. So I guess when do you listen to the rhetoric? How would you have to? Because politicians come and go. These people come and go. So it's like, well, this administration or maybe it isn't friendly to crypto, but the next one might be. Or are you going to treat it as such because you're a trader and I'm going to be out here in here?
Yeah. So, everything at the end of the day is about trading for me. More or less, it's the charts, it's what's going on there. But, because of, my law degree and whatnot, and having studied securities law, antitrust law, that kind of fun stuff. Yes, I actually took classes on that stuff. Crazy. Anyway.
It's like, how you're a real student to some of those degrees. You must really enjoy learning, because a lot of people wouldn't even sit through. I got most of that stuff, but I'm assuming it's really helped you in terms of kind of having the broader macro understanding of all this stuff.
Yeah, I think it's been great, especially because of what I chose to study in law school and how, and with what crypto is, emerging technology law, tax law, corporate law, all these things, and how, and kind of studying what's going on with the SEC and how they apply their laws and all that, and how the laws are looked at. So yeah, it gives me a good framework from which to kind of look at things. I don't know that there's anything specific that I would look for. I tend to listen to the language. I tend to listen to not only what they're saying, but maybe in their language, what they're not saying in relation to what the law actually is, to kind of get an understanding of maybe they're trying to move things without actually having to go through the motions. Kind of like the Fed does. The Fed says, hey, we're going to do this to try to get you to do that. So that way they don't have to, because at the end of the day, the Fed has nothing other than, temporary reactionary ability with the markets. Because again, the markets are going to do what they're going to do regardless. The Fed can want you to go out there and spend all this money and take out all these loans all it wants. But as an aggregate, if we decide we just tapped out, we're concerned about the economy, we're already highly leveraged, we're not interested. There's nothing the Fed can do, because the Fed can't just go in and do all these things that people wanted to do, send out money to people directly and everything, because the laws are against it. So it's a lot of times it's about what is not actually said. And so I'll listen to it, and if something really gets me interested, I'll post it on Twitter there, on my feed there, or I'll mention it to everybody over there, with us at TWC, and kind of tell them where I'm interested and why I'm interested in those areas. But I don't know that there's anything necessarily that specifically comes out. I don't think right now that there's a death to Bitcoin yet.
Mm-hmm.
I don't see that out there yet. There are enough big companies trying to make some money with it that I think if that happens, it's going to be staved off a bit.
Okay.
But I don't see it necessarily happening at the moment right now. I think we've still got, in my view, we've still got upside and some good stuff. Now, again, if we blow off, through this Q4 here, and then we hit another bear market and the overall economy tanks, that's going to make it ripe for regulation.
Okay.
That's going to be where you see regulators really step in, I think.
Yeah, to me, I go through the scenarios like, why, because you talked about control and the government. It's like, why would they allow it to exist, at least in an unregulated fashion? I mean, they're going to lose power and lose control. And I feel like, I want to say Raoul Paul mentioned this, is like this, the central bank stable coins coming, the digitization of the dollar, and they're going to be to manipulate the market, it would put stuff into your bank account, take stuff. It's just, he was going down a road, and it wasn't like he was against it, but the conspiracy wheels start turning about all the different things they can do for control. Because like, I don't know, these people like to say Bitcoin maxis, like, you never can take away my Bitcoin. I'm like, I don't know, torture seems pretty effective to me. So
right?
Someone had
everybody's big until it happens, right?
Yeah, I'd be like, here are the keys, take it. I don't need it.
I'll go dig ditches or something.
Yeah. So, do you prescribe to kind of that, not to get conspiratorial, but that it's just never going to be what these people envision it to be?
Yeah, I think with any new technology or any new thing that happens, you need the maximalists. You need the guys, because they're the ones out there constantly hitting down, no matter what happens. Mm-hmm. This is going to happen. This is going to happen. And it eventually gets notice, and other people out there become interested. And so then it grows, right? So, you always need that. Mm-hmm. I don't see it becoming some kind of thing that people can use to sidestep power in the world. Power is going to seek to remain, and as people, we know historically, history has proven that we are going to vote some other power into place. Mm-hmm. If the government here in the U.S. was to actually get destroyed and go down, we would just form another one. Mm-hmm. We're not going to sit out here and go, oh no, we're just fine on our own. People don't want that. They want this belief that, even if it's not true, that the government's going to do for them, that the government's going to protect them. They don't have to think about their own security or their own bank, which is kind of funny because people were killed quite often, daily here, even with all the laws we have.
Yeah.
And so it's like, when you brought up that point about the news and how it seems like, all the good news comes out and prices going up, all the bad news when it's going down. And I don't necessarily think that's what it is. I think we tend to pay attention at certain points. So if prices going up, we tend to pay attention to the good news, because the good news and the bad news happens every day. Mm-hmm. Price moves every day, but only specific times do we actually go, oh, wait, look, And so I think we kind of backtrack and look for a reason for price movement, especially if it's significant, and we find things to make that happen. And then I think it's going to be that same way, as we continue on with all that. So, yeah, it's kind of crazy as all is. I don't think, Bitcoin's going nowhere at the moment. I think if it, the regulation is going to be good in the sense that, so if you're bigger money, you often, depending on what you're doing, if you're a fund or if you're a company or whatever, you have certain laws that dictate how you can or cannot invest the money that you may have on hand. There are legal responsibilities and whatnot. And so you need more clarification if you want to put money into the market, right? Mm-hmm. So regulations help them get that clarification, which means more money could come in as a result.
Okay. And do you feel the same way for DeFi and Ethereum? Like will they face harsher regulations and possibly get extinguished before? Because I feel like the tech is there. Like they're gonna adopt it and they're gonna use it. I just don't think it's gonna be, because I appreciate the libertarian point of view about true freedom and I can do what I want with my money. Like I was just trying to make a wire transfer, they denied it. Then I walk in there and I have to show, do all this stuff to isn't it my money? And then you talk about capital gains, and I'm not like an anti-tax guy, because I know you got to pay for some services, but it just keeps inflating. They keep inflating taxes, and it's like man, you tax me when I make the money, and then I put it in, I take all the risk on for even just a stock. And if it goes to zero, like Luck and Coffee, it's like, I don't get, where are you helping me out there? But yet if I make money and my gamble pays off or my investment pays off, you're going to take more of my money. So it's like, it drives me crazy. But DeFi seems like definitely a hot issue. And I feel like it's so just obtuse for a lot of people that they're going to just like crack down on that hard.
Yeah, I think you're right. I think that would be the one area of cryptocurrency to probably get the most attention. Because you are dealing with money, you are dealing with, what would sometimes be considered, money services business maybe, or depending on how it's done, securities. So yeah, I think there's a lot of ripeness in there for to get government's attention with that. I think the better parts of it, you're already established banking companies and whatever are going to take and incorporate, and they're going to do the lobbying thing, which allows government to allow them to do that. But again, the little guys is what's going to get cut out on that, as far as the little companies and little guy being able to maybe participate in such a way as they are now with these things. I think that'll it's got a good possibility of being hit.
Speaking of Twitter and influence, crypto Twitter, I've seen you kind of outspoken about it in the past. And I started following people when I first got into the space, and I've whittled it down to, I think, people who I feel like teach me something, show me something, show either strategies or like, it's a little more productive. But I think most of it, man, it feels so full of it and so toxic. And I know a lot of people gravitate toward it, and some people are looking for just calls and price to be told what to do. A lot of internal squabbling, people trying to call each other out. How do you approach crypto Twitter? Do you recommend that new traders even look at it? Is it good to kind of gauge market sentiment off that? What do you think?
In general, I think social media is a cesspool. I grew up well before it. Our social media was meeting our friends out on the corner on our bicycles,
Yeah. I miss those days.
And so, I tend to, in doing what I do, I tend to get a lot of nonsense. I don't spend a lot of time worrying about people who have a negative view or a negative saying about something I'm saying, or they don't agree with me, because most of it are people that kind of believe that, they're never at fault. The world owes them, stuff like that. So I don't really worry about that a whole lot. But, this is 40 somewhat years of working on this. I don't think as human beings that we grow up ready to deal with that. You have to constantly work to be able to deal with it. And so for a lot of new people, especially if they're young and they've grown up in social media, I can't even imagine. It's awful. I limit my son, he's 10 years old. I limit his time on any kind of social media at all, just because of the nonsense. He doesn't have, all these other accounts. He watches some YouTube stuff, his little gamer guys that he watches. But because you can't regulate that, you can't regulate. People get out there and they look for attention. Any attention is good attention, even if it's bad attention.
Yeah.
And so you get all that. And then what happens if you're a trader and you're just starting out, you don't know what you're doing anyway, is you go out there and you go on a limb because something looks so juicy. You're like, man, I'm long there to this point. And then it does something different. But then all of a sudden, you don't feel like you can step back out of that. You feel like, oh my gosh, if I do that, they're going to roast me online. They're going to say, oh, I'm not a real trader. Oh, I'm such a loser. And the social media makes people want to keep up with other people. And I think it ends up being a real mess if you really want to learn, if you really want to trade. So I think for most people, it's probably not the best thing to do. I know almost everybody is not going to listen to that. They're going to do it anyway. So that's kind of where we're at. I try to sift through that a bit. I try to be, honest and open. I tell people what I believe they need to hear rather than what they want to hear, because they'll often, as you said, seek out people who tell them what to do, that they kind of in that same mindset. Oh, price is definitely going up no matter what. I tell you,
when I first came across your stuff, I was like, oh, this guy's saying Bitcoin's going to go down. I don't like hearing that. I had that reaction, and I had been following some people who just kept saying up, 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 up only, up only, up only. And I was like, man, I fell into that. And you start seeking out people just reaffirm that belief that you have, because that's what you're overly invested in that. And you have too much on that side of it. And then I finally, after that crash, I was just like, man, you got to wise up and start looking at, because there's like a few people on there who will say, oh, I'm long. Oh my God, this looks ready to rip. Oh my God. And it's just like they have one line on a chart, and then, and they have such massive followings. They do get a pump after they post that. And then you're like chasing it up. And I just found it to be, and I've seen some other stuff too. And I'm like you, I'm older now, and I'm just like, man, it's just a toxic mess, social media. And, you know, with family and stuff, I have 3 kids, 5, 3 and 1. And it's like, I don't even have time. Like, even if I want to, like, even if promoting your business, as you know, it's just hard to get on there and like make sure you keep up with it and post and like keep it engaged. It's like, man, I want to go do something else or play with my kid or do something. You know what I mean?
Right, exactly.
When you're done, you want to be done. And I've seen people, because I work for some companies where they're constantly on social media because they have to be. It's like, how do you outreach now and how you get new customers? And how, it's just like, it's a never ending circle. So it's funny to hear you limiting your son. And that kind of gets us kind of to the last subject I wanted to talk about, and kind of the world today, from gaining financial independence to the political divides to raising your kids. How are you approaching kind of, I feel like we're similar, and I don't want to read too much into kind of what your statements have been in terms of kind of a victim mentality today. How are you kind of trying to buffer your son from all that noise as he gets older, at teenage years? There's so much social media influence. How are you approaching that daunting task?
You know, and it is. And, you know, I might notice it to a greater degree than maybe a lot of parents out there, because I've worked so hard in understanding that myself. So with my son, you know, I spend my time with him, you know, and I make sure I'm there in the moment with him. You know, I'm not sitting there chatting up Twitter or something while we're in the same room. You know, it's there. He's with me. We're watching or talking or whatever. So I think that's the first thing.
Do you put your phone away? Like, will you be looking at charts? So, I mean, it's very tempting. I've been doing it a lot. My wife's getting mad at me. I'm like, I gotta put it down.
Stick it away. I stick it away. There's and with what I'm doing with, you know, with the company here with Texas West Capital, I spend a lot more time working than what I would normally be. But I make sure that I carve out time every day, a couple of times in the day, in which I can be with him. Which means I end up working till 1 or 2 a.m. a lot of times. But you know, to me, it's important that he gets that. That's the number one thing. I think as a parent, being in the moment with your child. It's not that you have to be in the moment with them all the time, but if you're going to be with them, be with them. I think if you do that, I think that takes care of 75, 80% of the issues you're ever going to have. Because a lot of people are like, oh, well, I'm with my kid. And what they mean is, oh, I'm chatting with my girlfriend, or I'm chatting on the phone, or I'm looking through the phone or whatever, and I'm not really there with them. Other than that, it's just a constant reminder to him to be who he is, and to understand that most people won't get that, to understand that most people will not understand that, but that he should do it anyway. You know, and, you know, being 10 years old, you know, he's a kid, you got to remind him, you got to constantly do it. But you know, I think it's what we need to do, because here in a few years, he's going to get to that point where he's not really going to pay attention anymore. You've got this short time when they're kids to really instill in them these values and these ways to look at the world. And if you do it right, then I think you're good. If you don't, I think you end up having children that become difficult. And I don't mean that they're bad kids, but just that they haven't been prepared. And they don't understand, because as a kid, you don't have real life experience. You don't understand when things may be bothering you or how they're affecting you. And, you know, you don't understand all this self-regulation, which is another thing we're constantly talking about. And so, you know, that's what it is, man. It's just being there. It's talking, it's touching. Kids love to be touched, man. You don't even have to say something. You can just sit there with your hand on your kid's back. And that will do so much more than just being in the room with them and not anything.
I've noticed that. I caught myself once with my daughter. She was trying to tell me something, and I was on my phone, and then I heard it stop. And then I looked up, and she had just given up, and she went off to go play. And I was like, oh man, I felt terrible. I was like, man, I'm that parent right now. And so I put it away, and I try, like you said, to be in the moment. And it's weird because like I'm trying not to screw them up too much. And it's like, you know, she's the oldest, so it's like she's kind of like the test dummy. And it's like you're like, yeah. And she's getting older. It's like, man, I hope I'm doing stuff right and teaching her like the values that I want, and like to I don't know, to fight that influence of everything else that's like kind of constantly barraging or will barrage her. And I worry like once they get to the teenage years, and I share that opinion that you just said about you kind of have a limited time to set that foundation.
Yeah.
And then it's gone.
Yeah. Yeah. They get to become teens, and all of a sudden their friends, they listen to the advice from their friends, not from their parents.
Mm-hmm.
Their friends know more about what's going on in their life than you do. And, I think it's great that you view it that way, that you're trying and that you're worried, because that means that you care, I've talked to so many parents who are like, oh, well, I did all this with my kid. I don't know why they turned out that way. But then when you really dig into it, they were working, maybe 2-family home, everybody's working, maybe a single parent working all the time, not really there when they were there. You're worn out. It's hard to make that time with the kids. But I think, I just think you have to.
Yeah.
So I think if you're not concerned about it, I think is where you'd be worried.
Yeah. I was thinking about that the other day, and working so much because I want financial independence. I want to get to that point where I can take him somewhere, do something. I don't have to work all the time. But I noticed like in that process, you're working all the time. And and if you don't take the time out, all that other stuff, their life, they're growing up, all the experiences are going to pass you by. Yep. And I was like, man, then you got to find the balance between like putting in the work to like get better at whatever you're trying to do, but also not missing their childhood, because it happens so fast. They're changing so quick. And I'm just like, man, how do you find, have you found that balance when you're, working and you're running your company, and it's like, I see how busy you are and all the content you're posting. And when he was younger and to now, did you just have to set hours for yourself?
Yeah. So, I still struggle with it. I tend to be a workaholic by nature anyway. My dad was the same way. Mm-hmm. Just worked all the dang time. And so I tend to do that as well. I take a lot of, I'm entrepreneurial in that I like to build things. So I'm always trying to add, I'm always trying to do. So I still struggle with that. I'm not going to say it's easy. I'm going to say I've got it figured out. But one thing that I've noticed has helped is setting a specific time. You set a specific time and do it. And so that's like, at the end of the day, I'll do half the updates prior to around 6:00 or so around that area. And then I'll do the other half at around 9:00 after that. I've got that window there that it's all about me and him.
Okay.
And, and then of course, I work from the home office, which makes it easier for him to come in and out, and see me throughout the day, which I think helps a lot as well. A lot of people don't have that ability though. Mm-hmm. But, and then on the weekends, of course, finding time, doing things that he wants to do. He loves to game. Mm-hmm. I don't hate gaming, but I found that at this point, sometimes I'm really exhausted on the weekends, but it's just about just sucking it up and making that time, because again, it just like I say, it goes by so quick, and all these hugs they give you and all this, I love you and whatever, that kind of goes to the wayside here in a few years.
Yeah.
And so I want to try and make sure that I don't miss that. Like you said, that you don't miss them growing up. Because it's easy to just sit there and then blink, and then next thing you know, they're adults, and you're like, "What the heck happened?"
Yeah,
I want him to have great memories. I want him to have, always feel safe and secure and loved, and those things. So for me, that drives me to do it. Still working on it. Still not figured it out exactly, but definitely, I think setting aside specific time really does help.
Yeah. No, that's good advice, and I think it's a good reminder for me when you talk to the people who kind of are doing that stuff. It helps kind of give you a kick going, hey, remember, don't have your head buried. Moving into the last part, I wanted to do kind of a rapid fire. If you want to expand on something, feel free. But starting off here, what's your greatest worry moving forward? I guess socially, maybe financially for the country.
I don't know that I necessarily have a worry. Again, you've talked about The Fourth Turning, great book, read that. I'm all about cycles. I've studied cycles, whatever. And what I believe is just we're coming to this end. There's that great quote that hard times create hard men who create easy times who create easy men. Mm-hmm. And it basically just says, you're at the one point of your start, you've got to work hard. You don't have a lot of time to do a lot of the nonsense and worried about your feelings and all this stuff. You got to go out and do. And that creates prosperity. And with prosperity comes easier lives, leisure, more time to goof off and worry about how your emotions are, that you're offended by somebody. But then that leads to a breakdown and you go back to the hard times again. Ronald Reagan said it, best when he said, we're always just one generation away from losing, that freedom, losing that thing that we have. And so I don't know necessarily that I'm worried about it, because I believe that it's going to happen, that we're going to have that cycle and we're going to go through it. My worry is all about my son. I just want him to grow up as healthy and successful as possible in whatever it is he wants to do. Beyond that, to hopefully help him understand how the world is and how people are in general, and why they may not be the same way he is, but that's okay. And go with that. I think that's more my worry.
Yeah, I know, because the show is called The Dad's Doomsday Guide, and we've covered some pretty weird stuff. But that was without going back into all that stuff. But when people talk about kind of the dollar collapsing, all this stuff, I was just kind of like, you really want that to happen? Like, I feel like society wise, in a breakdown in like violence and like poverty, and it'd be really ugly. And I don't think a lot of those keyboard warrior people think about that stuff.
They don't think that far. Exactly.
Yeah. And that scares me. And, man, geopolitically, and like China, Russia, and actually if that happened, what kind of the influence that we trying to gain? It gets so messy. I worry about that a lot, but I don't know. Do you even worry? I mean, do you even talk about your son? Do you plan on talking to him about that kind of stuff as he gets older, or are you kind of like, he'll maybe figure it out if that happens?
I don't really, like you said, I've got this really diverse, structured education. And of course I've got my own side stuff. I've just got this personality that I love to learn about everything. If somebody says something and I don't know truthfully what the answer is, I immediately have to go look and find out and why. And then I grew up in the military during the Cold War. So, it was always around us, everything that was going on with Russia and what the World War III nuclear stuff. Even during the 80s, all the TV shows were, either 16 Candles type, or they were, what's it called? The movie types, the military movie types.
Oh, yeah.
So that's just kind of what you grew up in. And so I don't necessarily lean that on my son, but I don't hold back. I talk about things. I always talk to him, and a lot of stuff he may not understand at the time, but I do speak to him, not as a baby or anything. As he gets older, I'll talk more and more in depth about it. But I try to draw these connections, the real broad connections right now at his young age.
Yeah.
The big broad things, not the little specifics, because he won't get that, but he can start with those broad connections and kind of work in a little bit.
For sure. Best investment trade you've ever made?
Honestly, I think it's going to have to be XRP.
Oh, really?
It was, like I said, buying it at less than half a cent or around half a cent, and then selling it, average about 284, 285, 286, somewhere right around there. You can imagine I probably bought quite a bit at the at the low there. So it was quite significant.
Everybody loves to say how XRP is going to die. Do you think it's going to?
Everybody freaked out when the whole SEC thing came, and I was on live stream and public live stream. And I said, what's going to happen is a lot of y'all probably going to be kicking yourself, because, with everybody that's invested in Ripple and XRP, if the SEC were to go to cut them off at the knees, that would hurt such a large swath of people and such a large swath of money. So they're not going to do that. What would most likely happen is if they did get a decision, then they'd probably give them a slap on the wrist, a fine, something like that. And then say you have to maybe change some things here, but they're not just going to rip them off at the knees. So is XRP going to go down? No, I don't think so. I think it's still got some future ahead of it.
Worst investment trade ever?
Worst investment trade ever. Gosh, I've got a few of those. Probably Microsoft, the late 90s. At one point there, right as we came into I say late 90s, so it'd be 2000 at the dot-com bubble. That was my first bubble. And that was probably my biggest loss there. Because
they've had quite
I didn't understand.
Yeah. They've had quite the resurgence though, as of late.
Yeah. They've done great since then. I didn't hold on.
Yeah.
I freaked out after a large drop, after a lot of money lost, and got out. And yeah.
The rest is history. Well, you made up for it with Ripple.
Do what then?
You made up for it with Ripple.
Yeah, with the XRP. Yeah, exactly.
What do you think will be the fastest growing sector over the next decade?
Oh, man. over the next decade. See that guy that takes so many things into account. Do we get the depression?
That's
if we
true.
do, is it a short or long term?
I guess assuming that doesn't happen, we don't get that next.
I mean, I think tech just continues to ring on out there. So much has happened in such a short period of time lately that if it doesn't happen, there's all this money out there, and it continues to find its way into tech. Mm-hmm. So I think when you look at things like applications of AI in areas you probably never thought of. There are some people still concerned about it, and be Terminator stuff or whatever, but, but if it doesn't, there's a lot of significant areas in which AI can really kind of get in there. And what that's going to do is it's going to put a lot of people out of work. Mm-hmm. But as we always find out is when industries or segments kind of dwindle or die off, new ones are created. There has to be people to run the machines. There has to be people to run the code, to figure the code, to do all these other outside things that have resulted from it. So I think tech's got a lot of possibility.
And what do you think the worst sector will be where you see it kind of dying off?
Man, anything, God, man, I don't even know that you want to say sector. I could say anything where where it's manually done. I think the more manually operated it is, the more open it is to being disrupted by tech. Mm-hmm. Amazon uses so much tech, robots and whatever, that pick the orders, sort the orders, send the orders. Yeah. It's almost all completely, automated. Yeah. And so I think, if you're looking at areas like that, where you're looking at warehousing and, stuff like that, where you used to have people with a significant portion of it, I think that's probably going to be going to the wayside. Anything that can be automated, I think is going to it's going to be.
If you had to put all your money in one stock for the next 5 to 10 years, which stock would it be? What do you, and God, yeah, disclaimer, like this isn't financial advice, so don't do this. But if you had, you're a gambling man, you had to throw it all in one stock, YOLO, what would it be?
Yes, everything against what I do.
I know this is like,
you know what? I'll be honest with you. I think Amazon's a great place to be. Amazon, it's really just grown from that one thing, 20 years later into everything. It continues to expand. It just offers so much. And now with its AWS services there, they're basically the backbone of your company. I mean, I find it hard to find. So, and on top of all that, they're established. Mm-hmm. They've been doing this for a while now. They've great increases. Everybody pretty much loves them. Are they going to love them without Jeff Bezos now? I don't know. But I think just from a company that's already well set and just has shown it has the ability to get into so many things and do them well, I think Amazon probably be a pretty good one there.
What if you had to pick one crypto? I feel like you'd say Bitcoin for what it's worth, obviously with everything coming down, but Ethereum seems to be obviously pretty popular with people and kind of with the windows and doorways that's opening up. But what do you think for that next 5 to 10 years?
Yeah, I think the hard thing about that is because, again, going back to what you already said about how the technology is advancing so rapidly. Mm-hmm. I think if I look at that, I think Ethereum's a great thing. Just because it's it's their first smart contracts and whatever. And so everybody knows it and all these things are being built on it and, all this. But, in 5 to 10 years, that's so much time in the world of crypto. Mm-hmm. And what you're going to see is ridiculous development coming in the next bull market. That's where this all happens. And something could come up there that ends up, taking it out. So again, I kind of go back to Bitcoin, and not because Bitcoin's anything special, but because it was the first one. Mm-hmm. It's got that network effect. Everybody puts the money into there. You look at where the big money is coming in. Sure, it's kind of diversifying a little bit. Maybe ADA, maybe Ethereum, maybe Sol, something like that. Mm-hmm. But everybody's putting it into Bitcoin because that is the standard there, mm-hmm. And I think that ends up being your safest. It's not going to be your biggest return, but I think it's probably safer than the rest of them because everything else it's because of what it does different. Mm-hmm. Again, Ethereum because the smart contract platform. So if somebody comes up with a better smart contract platform that gets the backing behind it that it needs. Again, we've got better ones out there, but it gets that backing behind it that it needs. It could, replace Ethereum. Mm-hmm. 5 to 10 is just such a long period of time in this right now with what we're doing.
If you could do it all over again, would you still choose to trade or would you do something entirely different?
Oh no, I would do it. I love it, man. I mean, even all the headache and everything I had to go through at first, it really provides such an amazing life. And again, I'm just one of those people that believes that I've got control over my life and I can make things happen. And there's nowhere better to do it than in the markets. It gives you opportunity every day to prove that you can do something.
Yeah. If you could pick only one strategy to trade, what would it be? Maybe Wyckoff, Elliott Wave, supply demand. What would be your go-to if you could choose one?
Yeah, I know I always do Elliott Wave, but I do it because it's good to give traders an idea of projections and targets. But really, Wyckoff is my bread and butter right there. That price action volume analysis is really where it's at.
Okay,
so that's what I would choose.
Only one. If you could pick only one indicator to match with the above, what would it be? RSI, MACD. What would you pick?
Yeah, I mean, honestly, just the regular volume, the normal volume. Yeah, it's against that whole volume price action.
I know everybody gets so fancy with all this stuff everywhere, and you're just like,
just do the basics.
In one word, make it really hard for you. What's the fastest way to financial independence?
You said one word.
Or you could be a couple words.
Risk management. I think it's risk management. Because again, at the end of the day, we can't possibly know the outcome of every decision we're going to make or that whole decision tree from it. But as long as we protect ourselves from being wrong significantly, we've got the ability to continue and go on and try again. So yeah, I'd say risk management.
Bitcoin or gold?
Oh, Bitcoin.
You think gold's going to phase out here?
No, I think Bitcoin. I think gold will always be there. But I don't think, again, as I mentioned earlier, I don't believe it moves the way people tend to think it moves. I think Bitcoin's got the greater potential for profit and whatnot. But, again, at the end of the day, it could get regulated out there. But for me right now, Bitcoin.
Best advice you've ever heard? Could be financial, could be life.
Best advice I've ever heard. Whether you believe you can or you can't, you're correct.
That's really good, actually.
Yeah.
I feel suddenly I need to think about that.
Yeah.
How low will Bitcoin go in the next bear market?
Oh man, that depends on how far it goes. I mean, if we just get the normal potential targets there at 100 or 125,000 or something, I could see it probably pulling back around 30.
Okay.
But if we get some kind of just crazy blow off that gets 185, 225, something like that, I mean, just gets weird. It might only get back down to 50 or 60.
Yeah. Last one. Leave it with a weird one. Are you a believer in all this alien talk, UFO government stuff? And what do you think will happen to the markets if the U.S. government comes out and says aliens, they're real?
All right. So I think I would be remiss to believe that in this wide galaxy, in this wide universe, in these multiple universes out that we are the only possible living species out there.
Mm-hmm.
But whatever else is out there may not be what we envision it to be. Life, could be single celled. But are there crazy green creatures out there that are gonna, make my rear end not happy that it's there? I don't know that I necessarily believe that, but I think we'd be crazy to believe there isn't something out there. I think I do believe that if there is, the government's, not letting us know because it drives people crazy. And so going to the markets, if there was, undeniable proof, I think it really depends on, are they coming down today? Are they showing up right here on national TV? Or are we just saying, hey, listen, 30 years ago, there was this out there. And I think if it's more along the lines, there might, 30 years ago, we saw this and we've got this, markets be okay. They show up on the doorstep. I think the markets get really scared really quick. It's that whole risk-off environment, I think.
What do you think? What asset would be most valuable? You think it would be gold again? Because it's like you give an alien gold, right? Or it's actually isn't that really plentiful in the universe?
Oh gosh, honestly, what would be best? Gosh, dog.
Probably toilet paper.
Yeah, we found the need for toilet paper during the pandemic. Yeah. It really was something substantial. I'm not going to go into my stories about that, but man, yeah, honestly, I don't know. I really. That's a question. I haven't even really thought about something like that.
Yeah, it gets weird fast. And I
don't know. I guess potentially gold just because it's been around or some kind of precious metal because it's been around for so long and it has, production uses and whatnot. You know, again, Bitcoin could always just really tank with something like that or be regulated out or whatever.
Yeah,
it'll still be around.
To think about that and to listen to some of these people, like serious people, like there's always the possibility that it's a black, you know, technology and they're just hiding stuff. But it's just so many people are saying it over such a long period of time. It gets weird, and you start thinking, man, what if they're just surveilling us? You know, these things are kind of moving around in and out of our atmosphere, and it's like they just have been here for thousands of years, and it's like. It's bizarre, but I mean, like you said, I don't think we're ever going to get that kind of answer from the government.
Yeah.
Well, I can't thank you enough for coming on. I really appreciate you giving us the time. If people want to know more about you, kind of trading, where to learn, what you guys kind of offer at TWC, where can they go to find out more of that information?
So, you can definitely get me at TX West Capital there on Twitter. And one of the best ways to kind of keep up with it, we just launched a new, macro newsletter this week. So they can sign up right there. But other than that, they can get us over at howtotradetowin.com. And they can kind of see what we offer there and come on in and join us. I always say I'm just a guy who does a thing. I'm nobody special. I don't do anything that, that y'all can't do. I think the one thing that really kind of makes what we do special is just our community there. Most of our people have been with us, if not from the very beginning 4 years ago, at least a couple of years. And so they continue to remain with us. And I just think it just builds a real strong, great, helpful community.
Yeah, well, I can say in the short time that I've kind of followed you and like looked at what you put out and kind of what you say and what you do, it's a breath of fresh air because, there's so much just BS on Twitter. There's so much just false promises. There's so much just garbage that it's like, I think in my opinion, if you want to learn, like where they would say, like learn how to fish, I mean, like you guys are where it's at because I think it feels like it's authentic and truthful information versus, number just go up.
Right. And, I think it's the way it's got to be. Everybody else is out there chasing clout, trying to be influencers because you can make money, selling to these large, selling whatever to these large groups of people. I'm just interested. I think if you're coming to me, you're serious about wanting to learn. You really want to know what's truthful out there. And I'm willing to give that to you. And for most people, it's not what they want to hear. But for those that do, they usually become a part of what we do and they stick around. And I think that just, again, kind of really makes it special what we do.
Well, awesome. And thank you again for coming on. I really appreciate you giving us the time.
Hey, man, I really appreciate you. Thank you so much.
All right, Chris.